Hello everyone, my name is Steven. Today I'm going to be going over AMC and GameStop stock prices and their charts, as well as some additional information regarding those stocks. Before we begin, I want to give a disclaimer that I'm not a financial advisor and this is not advice. You should do your own research and make your own decisions. And without further ado, let's get started. So starting off right here is the AMC chart. And right now their current price is 482, and at the end of after hours trading it looks like it hit a high of 482 and a low of 479, but overall it stayed at 482. You could see, looking at their RSI, the RSI was about 47.76, which is in the mid-range. If you go higher and around the 70-ish, a little higher than that, then it's overbought, and the opposite, around 30-ish, means that your stock is being undersold. So with that in mind, it's kind of in the middle range. With the MCAD, you could see that the signal is a negative 0.04, and the MCAD right now is running at a negative 0.03, which is a little bit higher than the signal, which shows that potentially people are going to be looking to buy more at this moment. Let's jump on over to the GameStop. This is also an hour interval, just like the AMC one. This one has 24-hour trading though, because it's GameStop. So we could see that the price continues past 5 p.m. So GameStop right now is standing at about 25, 27 for their stock price. We could see that with their RSI indicator, it's at a 56, so it's shooting a little bit up, which is good, because you want to see that people are wanting to buy it. You don't want it as undersold. When we move into the MCAD indicators, 1.5, and the signal is at 0.08, so people's are showing that they're wanting to buy more than in the past. I also wanted to go over back at AMC. I'll look at GameStop in a second here, but we could see that the stock price right now is trading about in line with both or all three of the 9, 12, and 26 day EMAs. And when we go over to GameStop, it shows around the same thing, a little lower than the 26-day EMA, but it's kind of in line with that. And I guess we'll see some changes, coming tomorrow, just because of all the fail to deliver option stocks. That could definitely increase the volume if those vendors have to buy those stocks to deliver them. So look at their charts a little bit. I wanted to go over GameStop's and AMC's balance sheets a little bit. Not the entire balance sheet, but just an important factor of it. There's this financial tool called current ratio, as well as there's a quick ratio. And essentially what that is are two different ratios, sort of the same thing. They are both basically trying to show that AMC and GameStop are able to pay off their short-term debts. The only thing different about the quick ratio is that it does not include additional financing needed to pay those liabilities, nor selling of inventory to pay those liabilities. So looking at those different ratios, we could kind of see if a company is financially healthy. Not overall if they're a profitable company, but if they're able to pay their debts, which is a good indicator. Because if you have a company that's not able to pay their debts, then bankruptcy is more likely than if a company is able to make sure that their liabilities are paid for, as well as having enough current assets to make sure those liabilities are paid for. So let's start off with GameStop. We could see that let me explain how to do the current and quick or acid test ratio. The current ratio is your current assets divided by your current liabilities, and that gives you a number to one being the amount of debts, and then your assets to see essentially if you're able to do it. If you have point zero something or point something and then the colon and then one, it's shown that it's most likely that you are not making enough to essentially what the ratio is how much assets to debt do you have, and if you have a higher number of assets to debt, then you're most likely in a better spot as a company just because you are able to take care of those liabilities with cash or cash equivalents and certain things like that on hand. So with the current ratio, like I said, you have to do your current assets divided by your current liabilities. So for this year, their current assets right here this is also in thousands. So you just multiply this number by 1,000 to get the dollar value. So you would take this number and then you would divide it by your total current liabilities. So your total current liabilities is going to be this number right here. So we take the other one divided by this one, and for 2024, it's a 2.11 to 1 ratio. In comparison to 2023, it's a 1.74 to 1, which means that they have enough assets and cash on hand to be able to pay for their liabilities, i.e. their debts. The asset test ratio is you wouldn't use your current asset. You would actually use cash equivalents, short-term investments, and your receivables, but you would not include inventory because inventory would be part of a current asset ratio, current ratio, and we're doing the quick ratio, which is a little different. It's a little different just because it's mainly going off after sort of cash on hand. They're easy to be liquidated, so they could pay for those debts quickly. So as we could see, I gave you both the 2023s and 2024s, and we could see a growth between 2023 and 2024 because 2023 was a 1.74 to 1 and 2024 is a 2.11 to 1. You could see that from 2023 to 2024, although the amount of current assets decreased, their current liabilities, which is down here, which is going to be the denominator of your calculation, you could see that their current liabilities, have drastically went down by about $400 million. So that's pretty substantial. So current liabilities are liabilities that are due within 1 year or the company's operating cycle. So essentially, think of it as like near-term things. So when we go to AMC, though, we could see that this one's actually in millions versus thousands, so it'll look a little different. But we could see that their current assets are right here. And if we scroll down a little bit, we could see their total current assets, which is in millions. So that right there is $913 million. And their current liabilities, so their total current liabilities, which is down here, is 1.5 billion. So we could already tell that their assets are way less than their liabilities, and that in the ratios that speaks. So for the current ratio, 2023 was 0.74 to 1, and this year's 0.61 to 1, which means that their ability to pay for their liabilities has decreased within just the year span. Also, both of these stocks and and the companies associated with the stocks have, this is all information that is recent as of January, and for the 2023 information, that is January of that year. So this is not accounting for the $250 million that AMC earned through their stock program, as well as GameStop's $3 billion that they've earned through selling their stock. And also does not account for their revenues of the year as well. Mainly in terms of what I'm speaking about is AMC, just because they have a lot of box office news in this past week, where, as we could see here, the top box office charts right now are showing a lot of gross income at the box office, with Inside Out 2, $236 million, Bad Boys Ride or Die at $125 million, and then so on and so forth. And Q2 results haven't come out for their incomes, so, and as we could see here, AMC's Q2 earnings report has not come out yet, because as we could see here in 2023, the second quarter ends on June 30th, so we'll get it afterwards. June 30th is here in about 10 days, and then we'll get the earnings report later on than that. But with all those box office hits right now, I wouldn't be surprised to see an increase within their earnings report. Lastly, over here on X, we could see that calls in the money, there's 156,000 calls in the money. Out of the money, 521,000 calls, and puts in the money, 54,000 puts out of the money. He says it's going to be an interesting day tomorrow. Tomorrow is when all these expire, the June 21st call date and also put date. So we'll see what happens, if people are going to execute them, or if they're going to see an increase in stock prices and potentially be able to sell off those contracts. I guess we won't know until tomorrow, but based off of the graphs over here, it seems like there's an uptick, at least for GameStop, AMC. Obviously, markets closed, same with after hours, so we won't know, but hopefully AMC generally reciprocates what's happening to GameStop. So if we see GameStop shoot up in the tomorrow morning, and maybe in pre-market, or we'll see it later on throughout the day, but hopefully we'll be able to get the investors of AMC and GameStop hopefully more than what they have invested in so far. Let's look back at X over here. We got Mike Investing saying GME GameStop ended the day with insanity and millions of dollars worth of calls loaded. Over $6 million worth of calls have been loaded today, and $2.5 million worth of puts have been sold off. These whales know the GME short squeeze is incoming. And as you can see from the graph that he put right here, I mean, you could see that a lot of people are anticipating that the market goes up for GameStop. So hopefully that shows with AMC too, because I myself am a holder of AMC. This guy right here says GME 4-hour 200 EMA support. Based on the 4-hour chart, GME has been bouncing off the 200 EMA hard. The 200 EMA has been acting as support. I like GME above 25. May see some consolidation here. If anything, then rips again. IMO if I could hold above 26 and $33. GME is a symmetrical triangle, and they will move up, most likely see resistance at the top of the triangle trend line. So these levels are above $33, would be 48 and 56, depending on how long GME takes to move up. So we could see that right here, exactly what he said in his post, and it's explaining it all right here. Anyways, that's all the information that I got for today. I hope some of that helped a little bit with knowledge about. We know that GameStop did a selling of their stock and raised about $3 billion extra on top of the billion that they already had, so they're at about $4 billion cash flow. And then we have AMC, which has a lot of liabilities. So they did get the $250 million from stock being sold, but that doesn't mean necessarily that they're gonna jump further down. Or AMC has a lot of liabilities, so that doesn't necessarily mean that the company is going to fail. But we would like to see from the Q2 results, whenever those come out, that the company made more revenues, and the $250 million that they did earn from selling their stock would also help contribute to that. So hopefully we could see a turnaround and see GameStop and AMC stock prices go up. See you next time.